All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. It is February 16th on a Thursday, 9:01 Eastern Standard Time. Thank you so much for taking the time out of your day to join me this morning and every morning at 9 a.m. Eastern Standard Time here on the YouTube channel. Appreciate it as always. Make sure bottom right-hand corner of your screen, a little black logo, click on that. Turn on notifications, subscribe to our channel. Make sure to hit that like button if you like these videos. Let's go ahead and begin the day. Dow futures down 284 points after a hotter than expected PPI number, and some more Fed headlines from Fed voter Mester. She said this morning that Mester saw a compelling case for a 50 basis point hike at the last FOMC meeting. So again, that's bringing down futures this morning. The US PPI for January came in at expectations at 6% year over year, above expectations of 5.4% year over year. The previous was 6.2. Housing starts did miss 1.309 million versus 1.356 million. Building permits came in at 1.339 million versus the 1.35 million estimate. So that's a miss. Mester is also saying that how far the Fed goes above 5% depends on the data. Fed rates must rise above 5% and remain there for quite an extended period of time. Yada, yada, yada. That's from Mester. And one more piece of the data dump, Philly Fed business outlook, negative 24.33 versus the negative 7.5 reading. This is the lowest since May 2020. New orders still remain solidly in contraction. Prices paid higher than expected, 26.5 versus 24.5 prior. Inventories 15.3 versus 0.9 prior. Again, these are surveys, Philly Fed survey. In terms of PPI, month over month, January was 0.7%, estimated of 0.4%. PPI excluding food and energy, this is core, 0.5% versus the estimate of 0.3%. Those are still above expectations on both. Final demand year over year, 6%, estimated 5.4%. And PPI core year over year, 5.4%, estimated of 4.3%. That has been tweeted on Twitter, so make sure to take a look this morning for any kind of info or updates in regards to the market. In terms of Fed fund futures, there's no really major change. The expectation is still the same, about 5.25 by September before any kind of rate cuts. So again, I would say they're saying here based on the Fed funds rate, according to Bloomberg, 5.26% would be the peak in July. And then you would get a cut or so by September. That's the expectation on Fed funds futures. Again, that could always change. All right, let's go ahead and get to it this morning. Let's go and take a look. Again, NASDAQ down 1.40%. That's down 178 points. S&P down 1.13%. You could see the S&P futures here this morning. 1942 on the Russell, down 1.2%. Crude oil is up 0.44%. 79.18 a barrel, kind of hovering around there below 80. $2.47 for gasoline futures, that's down 1%. 10-year treasury yields are jumping up 3.828%. The dollar index 103.96. Again, that's 0.03%, not too elevated. The VIX is bouncing 1952, that's up 7% this morning. Gold futures are down with the higher dollar, 18.43 an ounce. 21.51 for silver futures, down 0.31%. Copper is up nicely. Remember, copper kind of being our barometer for economic growth, 4.066 currently, up 1.38%. Interesting. Euro dollar flat this morning. That's another interesting caveat. We talked about the euro and the S&P correlation. 106.82. Dollar yen is up slightly, 3 pips, 134.19. Pound dollar 120.03. That's down 30 pips. Bitcoin 24,460. We got really close to that 25,000 mark, but rejected slightly a bit since we got that PPI number. 1676 for Ethereum. That's up 0.33%. So let's go ahead and chart it. Let's go to the S&P 500 futures this morning, and you could see that trend line that we drew here back on the hourly. I'll bring this up on the 4-hour, and you could see that we're really just holding pat here. That's right around the 100 moving average on the 4-hour chart. In terms of the market, has that changed anything in our view? No. It seems that the futures market tends to sell it, and then the actual cash session seems to buy, which is kind of opposite of what we had last year, where futures and Asia would buy it and then America session would sell it. Right now, we're kind of getting a little bit of the opposite. So again, in terms of the market, does this really change anything? Not in my view. I have an alert at 40.66 as support. If we break that, then we could start taking a look at going short. As we know, we do have seasonality here. Take a look at this. The last half of February, and we're right now on the 16th, it tends to starts getting a little weaker, and then all the way down. Keep in mind, we only have right around about 6 days, 7 sessions left. Monday, the market is closed. It's a short month in February, so again, we may get a little bit of sideways action, even more downside action if that's the case. But does that really change the big structure of the move that we've had? Not really, in my opinion. So again, you're going to get some moves down. It's not going to go one straight shot like we've been saying. Again, what we want is consistent upside potential in terms of stock prices with an actual support level being held and a nice trend line to the upside. It looks like that we're getting that right now, but as of right now, we're just kind of holding that trend line. So again, not really needed to make some really big decisions here or anything, or to chase anything. We're just going to have to hurry up and wait. I added some risk yesterday, some DraftKings for next week expiry. We were in the money. I had the 18 calls. Now it's down to about 6 cents this morning, but we were as high as $18.20. Let's see if we bounce off that 20 moving average. We did fill that gap that we had at 18. The problem is that it happened pre-market. Some good news is that we have a catalyst on DraftKings for calls. There was some great volume on it. Chart looked great. They report earnings after the bell today. So again, maybe we get a little bit of run up into the number, which is fine by me. I'll go ahead and take the profits and leave a runner for the earnings since it is for next week. But in terms of that, not much else. I did buy some Apple calls, but again, that's for next week. Let's see if we can get a little bit of a pop. We know that runs very close to the S&P. It's a little bit of a weakness this morning, I expect, but again, it is for next week. I want to go ahead and see if I can buy some time on that, see if this dip gets bought. But other than that, a very solid week all around. Palantir that we traded soared. Again, I closed yesterday mornings for a nice gain, but it went as high as around 300%. So some of those high betas definitely become lotto tickets, and they soar. Tesla, another one that did very well, but still couldn't break that 220 resistance. So again, when you have this kind of PPI number and then everyone's selling here in terms of the futures market, it's going to affect most, if not all, stocks currently, especially the NASDAQ. But again, that does change in terms of the session as we started getting price discovery in the morning, and then you start seeing a little bit more buying as the market opens, at least in the cash session, I've noticed. But that could change today, obviously. But in terms of the PPI number, does that really change anything to me? Not really. It seems that the bears are still kind of waiting for that next shoe to drop, yet the market still keeps going higher. And I think that you're starting to get a little bit more of a pain trade set up for the bears where, the fundamental analysis are not lining up for higher stock prices, but the technical analysis is. So again, I'm more of the camp of don't fight the tape, don't fight the flow. You can fight the Fed because the Fed has been wrong many times. That's fine. But again, the flow and the actual tape, you got to trade that. And again, the Fed can talk all they want, but we see how financial conditions are easing. We're seeing how the market is going higher regardless of the news that comes out. It seems like bad news happens pretty much on the daily, whether it's spy balloons, nuclear war, you name it. I mean, there's always something out there that's going to spook somebody. And that's fine. I can understand that. But at the end of the day, price action is what matters, and you just have to go by what you got in front of you. Let's take a look at the 10-year yield. Again, continuing to go higher. Bond yields continue to go higher, obviously, as rate expectations go higher. 2 years higher, anything in the front end are performing higher in terms of higher yields than the longer dated expiries, just for the simple fact that the 2 years is going to be affected very closely to Fed fund moves. So again, right now you basically have about a 5% risk-free yield on a 2 year. It's kind of tough to kind of say, hey, what's the point of buying stocks here? But we're not seeing that bond buying yet. People are saying, oh, I can get on Twitter, I can get a 2-year risk-free bond, but yet we see bond yields going higher. So by definition, those bond prices are going lower, meaning they're getting sold. So I think you're getting a little bit of a poker game here where people are saying, see, you can get bonds instead of the S&P and you don't have to trade stocks. You don't have to buy stocks. That's losing money. And I started to see that there's more little bit of jabs and more excuses from the bears because, well, they can't explain why this is happening. And what it is that you start pricing in everything. By October, we already priced in all the bad news you can think of. Yes, we know inflation's high, but inflation is falling. Yes, we know that the labor market is strong. Yeah, but again, that's not exactly a recessionary either. So it starts getting to the point that the burden of proof start going on the bears. Now they have to prove that things are bad, rather than in 2022, the bulls had to prove that things were going to be okay. So that's something that I want you guys to always keep in the back of your mind, that the burden of proof now is on the bears, since now we're near 18% off the lows, nearing a damn full bull market. Are we going to break this month? Well, we'll see. We'll see how the flow goes and how the tape goes. But with that being said, guys, it's a day by day currently. I don't think it's an investable market quite yet, unless you're dollar cost averaging, just for the simple fact that there's so many road mines. There's so many different aspects out there that could change the perspectives out there. And again, we all know nothing changes sentiment quite like price. Good morning. Let's go and take a look at AXP this morning. This is from Young J. AXP, we're taking a look at the 160 puts. I'm assuming you want to swing this, and I'm assuming you want to fill this gap. So let's take a look at it. All right, so I'm assuming Young Jay is looking at this 157.93 gap on American Express, which was the earnings fill gap. Would I buy this here? No, I would wait for that 20-day moving average to break first before you start buying puts on an American Express, personally, at least if you're trying to swing them. Short term, it'll be a little different, but I'm assuming the 160 strike, I would wait for that 170 break first. So I would place an alert there, and then you can go ahead and short, I would assume, to that gap fill, which is totally fine by me if you can get that. Let's go and take a look at Apple 150 puts. 150 puts, you need to break down below probably 152 to do so. If anything, I am long, expecting to get us back to 157.34. Obviously, we're pulling back a tad, which I'm okay with. But you do have a gap to fill here at 146.59. So you're right in between. You probably have to break below 152, Young Jay, if you're expecting to get a little more downside action on Apple and trade those 150 puts, where you can target around 147.78, which is the gap fill that is been highlighted here. So again, you do have the 20-day moving average that's about to break above the 200-day. That's a really good sign and a very bullish indicator as well. So again, let's see if Apple, where they settle in terms of the daily today. Again, we want to see how we close and see if we continue some more upside action. But I would say that Apple has more upside potential based on the daily of the 20 breaking above the 200 than I do looking down for more downside action. No questions today, just a simple thank you that GAR team has killed it this month. Thank you, Jeremy. Appreciate it as always. It's important not to just get it right, but we want to explain exactly what's happening. We want to give you guys the information. So if you don't just trade our signals, again, we have to be conservative. We have a lot of people depending on us. Can't just throw a bunch of stuff on the screen and hope for things to work out. That's not how it works. Again, we have to be very tactical and very, very, very assured on what we're trading in, because we don't want to lose, obviously, in every single trade. That's what we want to do. We want to make sure the risk management is there. But so far, so good. I think the newsletters have been helping. I think the videos have been helping. I think the explanations on the Discord has been helping. This is going to help you in the future, guys. So when you decide not to trade with us anymore and you want to do this on your own, you have the fundamentals and you already have all that expertise that you already built in from learning from us to do this on your own and trade whenever you want. So that's really the most important thing. And we know you can get your signal service and information from anywhere. But the most important thing is the explanation. Why do things happen the way they happen? Sure, anyone can guess. Sure, we think we're going to go up. We think we're going to go down. But make sure to know, why do we think we're going to go higher? Why do you think we're going to go lower? That's important. But appreciate it as always. Good morning, Carlos. What do you think of Meta 165 puts for next week? Let's go and take a look at it. Meta 165 puts. I have an alert here at 170.13. If that does break, then I would start taking a look at some puts, but we are not there yet. I need 170.13 to break down, and that's exactly what I'm waiting for. And then there's also another gap here, right around 161. So probably the 160 puts, if you break below 170, would be prudent to actually take a look at. Let me go and draw this gap fill here. Now, technically speaking, we did already fill that gap because they were upwards, but you could see that that is a secondary gap. But again, this is not really a gap because technically we've already filled that. But again, you could see 160. I think that's why you're targeting that. That's right near the 20-day moving average. Not a bad trade, but you need to get below 170.13. Do you think we hold support on 4100 S&P? I'm going to go to futures to take a look at that here in a second. Again, we still have that trend line here, but again, we've sunk below it before. Right back last Friday. Remember, we have OPEX this week, so I have an alert more of 4066 as support. That was that Wednesday boost and that support that we've had back in Friday. You could see it here. So again, I would wait for 4066 to break before anything because this could hold up. We could wick below 4100 and then bounce as well. So kind of difficult to trade puts at this very juncture currently because all dips have been pretty much bought, which has been very, very tough for the bears. What DraftKings calls do you have? I have the 18s for next week. That's the ones I have with the team, and you can see we're starting to bounce a little bit. We closed the day up 22% on DraftKings. So if we have this going on right now, we should be right around 40. Maybe if we get to around 1790, we'll go ahead and take it. Obviously, 40% you take it and move on. You move on with your day, and then you also have earnings after the bell. If you want to leave a runner, that's completely fine. But this should happen. This should hit in the morning. So a good trade on DraftKings. But yeah, swing good for earnings. I would take it at 40. Take your profits. Again, anything could happen. Rug pulls happen. And if not, it soars, you have a runner. That's fine. So far, the high beta names like the Upstarts, the Twilios of the world, Palantirs have done excellent. Maybe DraftKings does well with that Super Bowl. We had a new record of actual sportsbook bets in 2022. Maybe DraftKings gets a little action, gets a little love. Maybe. We'll see after the bell. But if I see 40%, I'm taking it. You know, there's no point of testing fate. Maybe you could take half. But again, it's all about taking that profit. And again, you will never go broke taking profit. Don't forget that. All right. Thank you, Wolf. Appreciate you guys as always. We'll go ahead and leave it there. Have a great rest of your morning, and we'll catch you guys tomorrow for the morning notes. No need to fear out there, guys. Again, we talked about seasonality. We saw seasonality. You're going to get some pullbacks here and there. That's completely healthy. The most important thing is, does support hold? Do we bounce? Do we continue? That's it. So being 305 on the Dow, down 305, that doesn't concern me. What concerns me is that, do we hold the structural upside move? Does the price action link up? That's really it. That's all we got to expect. We'll go and leave it there, guys. I will see you tomorrow. Have a great rest of your morning. Cheers.